Hello, everyone. Dr. Eames here. What I'd like to talk about this time is sole proprietorships. And as you can see from this graphic, we can make a nice, easy comparison of sole proprietorships to corporations. Now, sole proprietorship, of course, is business owned, usually by one person, and you're the entire show. You do everything from manage the books to doing the labor to coming up with the ideas, naming your business. You are it. As you can see on the pie here on the left, sole proprietorships are about 3/4 of the business, just under that, in the country. And what we see is approximately 600,000 new sole proprietorships starting up every year. On the other hand, if we look at corporations, they're about 20% of all the total number of businesses. But when you look at the pie on the right, they bring in 81% of all the receipts. And so if we're talking receipts, that's the same as money, that's revenue. And so that's where the money is. Certainly, this reinforces what I've talked about already with free market capitalism. It's one of the disadvantages, really, is that we do have the extreme wealthy and those who aren't doing so wealthy. And so there are these extremes of equality and extremes of wealth, and these pies here really do show that up. Um, but let's focus on the sole proprietorships first. Um, Here's the reasons that really help us understand why sole proprietorships do account for the largest number of businesses in the US by far. Um, the main advantage, of course, is it's fairly easy to start a business. And if it doesn't work out, it's fairly easy to end the business. And certainly, there's a lot of other things that go into it. Being your own boss is one of the biggest reasons so many people start up small businesses and so forth. For me, being your own boss is one of the number one reasons I've started businesses my entire life. Now, this notion of pride of ownership, it just sort of depends. But you do have a certain sense, if you own a business, that that is you, that is who you are, that's your identity. And so everything about yourself is sort of wrapped up in your role as the owner of a business. And a lot of that is some pride. I know when I went to regional warehouse sales for my collectible store, we would go to the distributor's warehouse. It was a couple of states over. And I would show up like the owner of many small collectible stores would from all the contiguous states there. And there would be about 200 of us, everybody there, all owning a small store, selling similar products and so forth, and buying the majority of their things from that distributor. And it was amazing the level of pride and so forth that people got from knowing that, oh, someone 2 states away from here heard the name of my business mentioned by someone in a good context. And sometimes you're able to leave a legacy. That just sort of depends on how successful you are, how long you last. Because certainly all businesses don't last forever, and in particularly sole proprietorships. If you can make it 3 to 5 years, you're doing pretty good. If you last beyond that, you're doing really good. But many can't make it much even past that. So leaving a legacy that you can pass on or sell the business or something, whatever it is, maybe, but the potential is there to do that. And certainly then you do have one of the big advantages of free market capitalism. You get to keep the money you make. If you can make a profit, well, it's yours. And you aren't taxed in any particular way by being a small business owner. There's no special tax that says sole proprietors pay X number of money. The only thing that you really do take on that you probably might not be expecting is that you have to pay your share of the Social Security tax deduction that normally would be paid by your employer. If you work for somebody by wages, they take out that payroll tax. You're contributing 15% of your gross earnings, and your employer is contributing 15% of your gross earnings. They match that, and it all goes to the government for Social Security. So what happens if you are a sole proprietor and you file your taxes that, hey, I've got a business and it's a separate schedule, then you have to include whatever profits you had. 15% of that has to be written out and owed to the government. There really isn't a special tax other than that, but that's not necessarily a special one. It's everybody pays Social Security in one form or another. Here's the downside. You have unlimited liability. If something goes wrong, you're responsible. So if you have a small store and you don't have any liability insurance and someone slips in the doorway and breaks their hip and an ambulance is called and all of a sudden later on you're sued for the cost of the emergency visit, the ambulance, some of the hospital costs, or even more. You have unlimited liability as a sole proprietor, and so hopefully you would have some basic insurance to protect you. That is one of the real downsides, this unlimited liability. And it means in court, if you were to lose, the judge could basically make a judgment against you. You might have to sell everything you owned, or have a tax put on, or a garnishment really put on whatever future earnings you have, but until it's paid. Um, the downside is also that most average people that start up these sole proprietorships have very limited financial resources. It's simple as that. They don't have a lot of money, but you have to have something of your own to start. So it is limited. You may have some management difficulties. Maybe you don't have any training. You don't know exactly how to go about organizing and managing your time and planning for the future. You have to learn these things. When it comes to time, you will find that you spend many more hours than you would working for someone else. Not uncommon to have at least 50 hours a week, but most people who have sole proprietorships live and breathe those sorts of things, and they're working just uncounted hours to be successful or just to break even. On the one side, there aren't any real fringe benefits unless you're doing extremely well. And so you're not getting time off for vacation. You're not getting time off for sick leave or anything like that. There's no one to pay that for you. In fact, these few fringe benefits, you may not even be able to afford your own health care insurance. So, and then you never know. You do have the potential to grow and keep those profits if you can make them. But there's a lot of competition out there today. The world competes on a global footing, even though it might not seem like it locally. But the products you consume in the course of your business and all of that stuff, it costs money and it does slow you down when you don't have very much of capital to work with. So your growth could be limited for a lot of reasons, business reasons, and you simply may not last long. And so that's why a lot of businesses never make it to that 5-year sort of mark. The time commitment is just really incredible when you think about it, when you own something. Here you can see that picture of a young lady that owns a clothing boutique. Just imagine how much time has to be spent in figuring out what inventory you're going to sell, what is going to be your emphasis, which groups of consumers are going to be the most important to you. How much are you open? How much money do you need for displays and fixtures? And how much should you spend on inventory and where do you get it? So it's a major commitment of time and energy and thought. And you'll constantly, once you get underway, be seeking out new customers and looking for people that can help you grow your business and expand. That means employees, and you've got to find the right ones, because turnover will certainly do you in. It's just too expensive to spend that time over and over getting people ready to work in your business. So there are downsides and constraints. It really comes down to this, that you have a work-life balancing act that is not that easy. And you can see here on the pie on the left, the great majority of people, 33, well, not the majority, but 33% are working more than 50 hours a week. So the implication of that is you're probably working close to 50 hours every week, just as a normal course. But 33% are working even more than that. And then when you look at 60 hours a week, 25% of sole proprietors are working more than 60 hours a week. So that means 60 is normal. And that is a lot of hours. And this goes on day after day. Okay, folks, that's all I really want to talk about this time. I'll talk to you again soon.